We are going to look at meaning of Treasury bills, features of Treasury bills, some of the advantages and disadvantages of the Treasury bills, how to open an account to start investing in the T-bills and bonds, and how you can use the Treasury bills to achieve some of your financial goals. Treasury bills are secure short-term investments offering you returns after a relatively short commitment of funds. Short-term meaning your money is being invested for a period of less than 1 year. That could be 3 months, 6 months, or 1 year. Some of the features that make Treasury bills to be attractive include: Treasury bills are units of government debts, meaning that you are investing in the government. They are secure because they have the backing of the government that issued them. Number 2 feature is short-term. Treasury bills mature in 91, 182, or 364 days. So that means that you will receive your returns within a period of 3, 6, or 12 months. They offer attractive rates. Treasury bills in Kenya offer consistently competitive returns for investors, making them attractive. The returns are usually in double digits and above market inflation, and also above other forms of investments. Treasury bills are auctioned weekly. If you go to the Central Bank of Kenya website, you will find the Treasury bills which have been floated there, and this provides consistent investment opportunities. Treasury bills are usually sold at a discount, meaning that investors pay less than the face value when purchasing the bill. Also, individuals, corporate bodies, individuals holding joint accounts can invest in Treasury bills without necessarily going through an intermediary. This, unlike the other forms of investment like money market fund, where you usually have to go through an intermediary or a third party who invest the money on your behalf. In Treasury bills, you can do this directly without necessarily going through a third party. The minimum face value purchase for Treasury bills is 50,000 according to the Central Bank of Kenya, sometimes at 100,000 Kenyan shillings, especially for the non-competitive bids. For the competitive bids, it goes up to 2 million Kenyan shillings and must be invested in denominations of 50,000 Kenyan shillings. Looking at some of these features, you find that it's such an attractive and an amazing way of earning passive income that sometimes could help you cover some of your monthly expenses without directly working for that particular income. What are some of the procedures, requirements, and documentation that are needed for you to open an account and to start investing in Treasury bills? First, you have to open a Central Securities Depository (CSD) account. This can be done through the Central Bank of Kenya website or through the DO CSD portal. And for you to open a CSD account, there are some requirements that you must have. Number 1, you need to hold an account with the Kenyan Commercial Bank. That could be either of the commercial banks in Kenya, that especially if you are investing in Kenya. You can collect a mandate card from the central bank or any of its branches and must fill out in a neat block letters. You will need to provide information about your commercial bank. Also, you will need to have 2 signatories from your commercial bank sign the card to verify the information that you have provided in the forms. When submitting your mandate card, you also need to submit a passport-size photo of yourself and stamped by a representative from the bank. You also need to submit a clear copy of your ID, passport, or alien certificate if you are a foreigner. Once all this is done and set, the next thing that you're supposed to do is to decide how you want to invest in the Treasury bills. Do you want to go for the 91, 182, or the 364 days? When you are ready to invest, you'll be able to choose from one of the options that you'll find in the CBK website. Here is a recent illustration of the Treasury bills on offer on the CBK website. As you can see, there is the 91-day, 182-day, and 364-day Treasury bills on offer. You can see there is the issue number, the auction date, that is the date when it's being auctioned, and the interest rates. Now, one thing you must have realized from the interest rate is that the longer you leave your money in the Treasury bills, the higher the interest rate that you are likely to get from your investment, as you can see from the 91-day, 182-day, and 364-day interest rates. Once you complete this step, you are supposed to submit bids via the CSD mobile app or through the central bank portal. The CSD account has some amazing features, including it allows retail investors and those abroad to invest in the government securities. It also allows retail investors to view auction results and payment details. One can also check upcoming corporate actions and access updated portfolio statements. You can see in real time how your money is performing in the market. You then have to wait to get the auction results. The Central Bank Auction Management Committee meets at 4 p.m. on auction days, and after considering all received bids, they usually determine the cutoff rate and the weighted average of the accepted bids for the market-determined coupon rate bonds. The results from the auctions are published through Twitter and the CBK website. Some of the advantages of using Treasury bills: there is zero default risk. This is because they are secure, and they are secure because they are government-backed, and also because the government is the issuer of these Treasury bills. The interest which you earned from the money which you invested, the government does not tax this money, and therefore this results in more money to the investor as compared to the other forms of investment where all the interest earned are subject to a withholding tax. Treasury bills have very high interest rates as compared to other forms of investments. They are usually sold at a discount, meaning, for example, if you invest in a 91-day Treasury bill, you will pay less than the bill's face value, but after the 91 days, you receive the full face value. Some of the disadvantages of the Treasury bills and bonds: number one, they have fixed interest rates. Investors here may sometimes not benefit from the new floated interest rate, especially when they are higher as compared to the other forms of investment like the money market fund, where the interest rate are usually floated on a daily basis. And sometimes you may find that the interest rate for today may be higher than the interest rate for the previous day. This is not the case in the Treasury bills, because when you subscribe to the Treasury bill when the interest rate was 15%, you will have to wait until the maturity. The interest rate cannot be altered or changed before the maturity. Treasury bills and bonds require huge sums of money compared to other investment. For you to subscribe for a Treasury bill or Treasury bond, they are usually set minimum, like say for example 50,000 Kenyan shillings or sometimes 100,000 Kenyan shillings. So you must have this minimum amount of money before you can subscribe to Treasury bills or bonds. While compared to the other forms of investment like money market fund, where sometimes you can start from as little as 200 shillings, 300 shillings, 5,000 shillings, 10,000 shillings, depending on the fund manager you are using. There is no liquidity in Treasury bills, meaning once you've subscribed to it and your money has been invested, you will have to wait until maturity. However, sometimes you can always resell it in the secondary market, but most of the time you'll find that you go at a loss when trying to resell it in the secondary market. So the Treasury bills and bonds, they only deal with the initial lump sum invested. You cannot top up the amount which you initially invested in the middle. You'll have to wait until maturity for you to subscribe to another Treasury bill. And finally, there is no flexibility in addressing investors' needs. You need your money tomorrow. You may not get it because of where it has been invested. But say you use other forms of investment like the money market fund, you can always withdraw your money in a span of 2 to 3 days. Or say you invested in SACCOs, you can always get access to loans against your contribution or savings. Some key features of the Treasury bonds include: it is a contract between a borrower and a lender. Like we said, Treasury bonds are just loans where the lender gives the borrower some amount of money and then they agree on certain terms and conditions. Treasury bonds have what we call the coupon rate. This is simply the interest rate. The interest rate cannot be changed in the middle of the investment. It has to carry on until it matures. There is the yield to maturity. That is simply the total rate of return earned when a bond makes all interest payments and repays the original principal. Other features include is the maturity date and sometimes also the name of the bond. There are various types of bonds that are usually issued in the financial markets. We are going to look at just but a few of them. The first one, we have green bonds. Green bonds are usually loans that are issued by corporations whenever they need funds, and mostly these funds, when they are obtained, they are used in environmental projects or projects that are related to climate change. Eurobonds, these are loans that are borrowed by the government and usually in a currency other than the one of the issuing country. Most countries, they usually take Eurobond in dollars. Municipal bonds are usually issued by the states, cities, or counties, or whenever they need money to fund other public projects. Corporate bonds are usually issued by corporations to raise capital for reasons such as expanding operations, or whenever they need to buy a new equipment, or sometimes to build new facilities. They are usually characterized by higher yields because there is always a higher risk of a company defaulting than the government. This bond thing is something that has been there for the longest time now, and there are people who have been using this bond form of investing for years, and they know, especially the rich people, this is what they do. They invest in bonds and they earn passive income in huge amounts, and in return, they're getting very good returns in the process. And I also came to realize that most people do not know about this, especially people in the low income earners. They do not understand this at all, probably because of the income that they are earning could be slightly less for them to invest in this kind of instruments. But I feel like it is for everybody. Everybody can invest in the treasury bills and the treasury bonds. What is lacking is just the financial information in the market on how to go about. But I'm hoping that with the video that you've just done, you've gotten one or two ideas that can help you in this process of investing in the treasury bills and the treasury bonds. Now, there was a message that was sent by the Central Bank of Kenya to all bond investors about there'll be some changes that will be taking effect as from the 12th of this a message to everybody who has ever invested with the central bank in the treasury bills and the treasury bonds. So the message was about there was so the central bank was updating the investors that as of 12th of December of this year, the investors will no longer be using the 16-digit transaction reference number that they have been using all this while, and they are coming up with a new system that will be just 8 alphanumeric key digits that you'll be using that you'll be using alongside the CSD account number, and also the cash amount that you're going to start investing with. So the details you'll be going into the bank whenever you want to invest in the government securities. You're going to need the new 8-digit reference number. You're going to need your CSD account number, and the cash amount. So this is the details which you'll be giving to your bank account. This is the details that you'll be giving to your bank whenever you are going to invest in the treasury bills. In order for you to process your payment from your bank to the Central Bank of Kenya, you need two numbers. That is, like we've said, we need the reference number, and you also need the CSD account number. So to get your reference number, you go to the CSD online portal. There was a problem with the app. I'm not sure if it has been rectified, but the people were trying to get it through this those CSD mobile app. There was a problem. I think it's because as of the time it wasn't updated yet. I'm not sure about now, but the easier way is to go through the online portal to get this reference number. Investing in bonds, I mean, it's something that has been there for years, and the few who know about it, I don't want to say few because they're not few. The many who know about it, they have been using it, and they are getting very good returns from this. Uh, they are usually floated every other year. In fact, the treasury bills, they are auctioned weekly, sometimes monthly. So with the amount you have, from 100,000 Kenyan shillings for the bonds, and 50,000 shillings you can invest in the treasury bills, and the interest rate which they are giving is very good. The recent one was at 16%, and I saw in the news this week that the investors were pushing the Central Bank of Kenya to at least give them an interest of 17%. But you see, the central bank, because of the recent Eurobond that was floated and oversubscribed, they are not interested, in quotes, in the new money, especially from the local investors, because there's currently lots of dollars in the economy. So the interest is still at 16% for the treasury bills, and the treasury bills and the treasury bonds. So we're also supposed to talk about how best you can use these investment opportunities to plan for your finances. Because I was speaking to one individual, and he was telling me that he has reached a point where the returns, the interest he gets from the bonds covers for all his monthly expenses. And I thought that was very smart. That was very smart. The interest he gets from the bonds pays for the rent, the interest he gets from the returns he gets from investing in the treasury bills, and the bonds pays for his expenses. That is the rent mostly, and maybe the house, like house expenses like the electricity and everything else. And then there's part of the money which he invested as an emergency fund in the money market. So the money market pays for the bills, like the medical expenses. He has a medical cover. So the interest which he gets from the medical cover, the interest which he gets from the money market, from the amount which he has invested, uses that to pay for the medical cover. He also has, he also took life insurance. Anyway, that is story for another day. But the key thing here is you can use these treasury bills and bonds to best plan your finances, in that the interest which you're getting, the returns which you're getting from the investment, you can use it to pay. You can use it to pay your monthly expenses. For instance, say you invest in the treasury bills, maybe or the treasury bonds, maybe 3 million or 2 million. You, in a year, you might, with the rate of 16%, you might get say like 320,000, 340,000, 300,000 as returns in a short span of just 1 year. And for, let's say, 300,000, if you pay, if you're paying a rent of, say, 20,000, let's say you stay in a house of 20,000, you see, with that kind of return of 300,000, you can easily pay the rent for the whole year, because that is like 12 months, and you have 20,000, that is to 40,000, and in fact you have an extra 60,000. So I feel like people should really adopt this. The process is really simple. The information is out there. There's a video out. You can see. You can see. There's a video out. You can learn how to invest in this instrument, because it offers very good returns. Yeah, and the requirements are not so much. You just need to have a commercial bank. You need to have a bank account, and be a bank account, maybe an ID or an alien certificate if you're a foreigner, for that matter. Yeah, and you are good to invest in the Treasury bills and bonds. So invest. You see, gone are the days when people used to just keep money lying somewhere in the bank account, and the banks, they used to use the money to invest in these instruments, and the interest majorly was theirs. And nowadays, money market is so popular that people no longer are using. People are trying to run away or shun away from using the traditional commercial banks because their eyes are being opened. Yeah, so that instead of just parking your money in a bank account, you have it somewhere invested in the treasury bills or in the money market. And in fact, the money market, what they do, these fund managers, they pull um, they pull money from different investors, and then they invest in the commercial. Then they invest in the treasury bills. Yeah, and you see they're just getting the same rates, only that now they're coming with huge sums of money from different investors, and from the rate which they have, from the interest rate which has been given by the central bank, they reap big, because when you invest big, of course you get big. And even the daily interest rates which they usually float and give to their clients, that is the fund managers for the money market, their benchmark is usually the 91-day treasury bills. That is the 3 months treasury bill. So do not, gone are the days, do not keep your money in a bank account. Instead, invest it somewhere. Invest it in treasury bills, invest it in money market. And I was hearing an argument, somebody was saying that the money market is better compared to treasury bills. It is okay. It's okay. It is just a matter of convenience. If you don't, it is just a matter of convenience, because I find the money market to be much easier, because some companies are offering very good rates. Uh, some companies are offering very good rates, 16%, 17%, division 18% in the market, and this compared to the treasury bills, just more or less the same. So the money market also has some advantages, because you can withdraw your money anytime, depending on the one you're using. I see most of them is between 2 to 3 days, but there are some which you can invest, you can withdraw up to 10,000 within the same day. Yeah, you can withdraw up to 10,000 within the same day. So invest, invest, invest. Do not keep your money in a bank account. Keep your money, let your money be moving, let your money be moving around. Let your money move around. Don't just let it sit there. Yeah. And I'm so happy, because this information, people know it. And if you invest, you earn passive income. I know people have been hearing of the saying that let your money work for you. People have been saying it, let your money work for you. But you ask them, how should my money work for me? What do you mean when you say let my money work for me? The best example is in treasury bills, and the other we call money market fund. Because in these places, you invest your money. Say you are doing your businesses, you make a profit of 100,000, 1 million, or your salary, you are always saving. You take a portion of that money, it's 1 million Kenyan shilling, you put it in a money market somewhere, or you put it in the treasury bills, and you find that the interest which you're going to get from this 1 million Kenyan shillings, the interest which you're going to get from this 1 million Kenyan shillings is enough to cater for your expenses for the whole year. Well, expenses here vary, but I'm assuming rent and maybe something like medical insurance. Yeah, you can cover, you can pay your utilities like the electricity, or any subscriptions that you have, any monthly subscriptions that you have. So invest, because I was saying from the money market, for instance, if you get to save like 1 million Kenyan shillings in the money market, you get to earn up to around 150,000 Kenyan shillings. That is after 1 year. That is good money, because that is money that you have not actively worked for. It is just money that was lying somewhere in a bank account, and then you get 150,000 from 1 million without actively working for that 150,000 Kenyan shillings. Probably you just worked for their million shillings, but the 150 which you've gotten from it, that is like bonus. Yeah. So that is an example of money working for you. This 150,000 can cover most of your expenses. I assume it can even pay rent for some people, like for a whole month, for a whole year. And that is just one example. You see, the more you invest now, the more money you get. Thank you so much. Please do not forget to subscribe, comment, like. If you have any questions with regards to whatever we've spoken about today, please reach out in the comment section. I'm also leaving my number in the description and my email. So feel free to reach out at any time. If you have any question, I'm always available. Thank you so much. Let us meet in the next video.